Thinking about buying or investing in the London property market, especially as an overseas investor? Well, you're going to want to check out this latest video because I'm going to give you an update on the first quarter of 2021 in the London property market and what that means for the rest of the year. Hi everyone, Arinzeh with ONYX property team in Keller Williams. Thank you so much for joining me on my YouTube channel once again. For those who are new, I'm a London-based property agent. I specialize in working with foreign investors, helping them buy their first or perhaps multiple rental properties in London as investments, or even for those who are looking for that second home and want to get their slice of London. If you're new to my channel, please make sure to hit the subscribe button and make sure to hit the like button if you like this video. In this video, we're going to be covering a summary of the first quarter of the London property market for 2021, as well as making some predictions and seeing what the statistics are telling us to try to forecast where the market's going for the rest of the year. So let's dive in. For the UK, the rate of annual price growth slowed to 5.7% in March from 6.9% in February, and the average UK house price was at $232,134. In London, for the first 3 months of the year, London was the UK's weakest performing area, with annual price growth falling to 4.8%, down from 6.2% in the final quarter of 2020. The average price in London for the first quarter was $482,576. Northwest London was the strongest performing region, with prices up 8.2% year on year. This is the highest rate of price growth in the area since 2005, and the average prices there have hit a record high of $181,999. Can you see the big difference between London prices and the rest of the UK? These stats have all been provided by the lender nationwide, by the way. In prime central London, it has struggled over the last several years, and particularly during the pandemic. At the end of March 2021, it saw a 0.4% quarterly increase, which was the first time since the general election of December 2019 that it actually had an increase. In the first quarter 2021, prices in outer prime London grew 0.7%, and those in southwest of the capital increased 1.3%. But what about transaction volume? These next two graphs really help give us an update. The data is from the website Plumplot, and we'll have a link in the description box below. In the London region, there were approximately 61,400 property sales for the previous 12 months ending in February 2021. This was a drop of 30.9% from the prior 12 months. Most properties were sold in the £500,000 to £750,000 price range, with 15,423 transactions being completed. This next graph shows that the bulk of transactions are in the resale market versus the new build market, which has stayed well below 25,000 and dropped off further in 2020. London has a chronic housing shortage, and most industry experts say that the city should be building at least 50,000 units per year to keep up with the demand. So even with Brexit, and we might see a slowdown in demand, we're still far below the amount of stock and units we should be producing. So while we saw decent price growth in 2020 and continued price growth in 2021, we've seen a significant drop in transaction volume. So what are the key factors that have impacted the dynamics so far? Well, the first one is that many people reassess their housing needs after being cooped up during the pandemic and multiple lockdowns, and reassessing what they'd actually need. Many started feeling like they needed more space, wanted to move outside the city, and also the demand for green space or outdoor space, whether that was in the form of a balcony, a garden, became a true premium. In addition, government measures were put in place to boost buying, such as a stamp duty holiday, which was originally scheduled to expire 31st of March 2021. However, last month, the UK spring budget delivered the housing market a further boost by extending the stamp duty holiday deadline to the 30th of June, with a taper down through to 30th of September. Meanwhile, a mortgage guarantee scheme to help first-time buyers with a 5% deposit was also launched. In addition, there's been a furlough scheme in place which has been further extended. Interest rates continue to remain low, and for foreign buyers, I want to showcase how the pound has performed of late. Whether it's the euro, US dollar, or Chinese yuan, the British pound has strengthened relative to these currencies. This means if you were needing to transfer your local currency in order to buy a property in the UK, it will definitely cost you more today than it did 12 months ago. Foreign buyers also now have to contend with an additional 2% stamp duty surcharge that has gone into effect as of the 2nd of April 2021. So what does this mean for the short-term outlook? So the overall economic factors, along with the positive pace of the UK's vaccinations program, means that many, including myself, anticipate that in the short run, the housing market will continue to remain strong. For foreign buyers, they'll need to factor the additional cost given that their currencies have weakened relative to the pound and the extra 2% stamp duty that I've also just mentioned. Foreign buyers represent about 40% of prime central London purchases, and many have not been able to participate over the last year due to travel restrictions. I've recently closed several transactions this year on behalf of overseas investors who are buying buy-to-let properties sight unseen. I found these properties, I've showcased them to the clients, we've run the numbers, and they've all stacked up. So they were happy to buy properties sight unseen. They were looking to take advantage of the reduced property prices, strong currencies at the time, and low interest rates. But for those who are looking for a second home that have not been able to participate, as many will want to come and see the properties for themselves. So there is pent-up demand, especially from that sector, but we'll have to see how the currency and stamp duty changes dampens that demand. On a longer term, the overall long-term outlook is uncertain. While positive aspects include that the economic recovery continues and vaccinations increase and the economy opens up, while interest rates remain low. In addition, with travel restrictions easing, we could see a flood of international buyers coming into the market. I know I'm working on behalf of several Hong Kong buyers who are taking advantage of the newly instituted pathway to residency that the UK government has put in place. However, the low labor markets could weaken and the government support could be withdrawn, and actual impact of Brexit restrictions could have adverse impact on the economy. Inflation doesn't seem to be much of a concern for the short term or midterm, as at 0.4% is well below the Bank of England target of 2%. So I hope this episode has given you a good sense of the current state of the London property market and the key factors. Please make sure to hit that like button if this video has been helpful to you, and if it's your first time here, don't forget to subscribe and hit the notification bell. Please also leave me a comment if you'd like to get a copy of the charts and stats that I've referenced in this video, as I'll have a download just for you. Finally, there's so much to consider when you are thinking about investing in a property, especially as an overseas buyer. You'll probably have plenty of questions, and I would welcome you to reach out, get in touch. I'm happy to have a chat and just go through your situation, what you're looking to achieve, and see if I can help. Thanks so much for watching. Make sure to check out the other videos on my YouTube channel where I share great things about the London property market and living in this incredible city. So that's Arinzeh with ONYX Property Team and Keller Williams. Bye for now.